What is good, guys? Welcome back to the channel, and today's topic will be my swing trading model, which is based around the Monday range. And you don't have to sit at the chart for 8 hours a day to make consistent money trading. I know many of you guys are working still full-time jobs or going to uni and can watch the charts all day long on the lower time frames. And let me tell you one thing, you don't have to sit at the charts all day long. You can still make a lot of money trading on the higher time frames. I would even say you're better off, especially if you're trading Forex, to watch the higher time frames for your trade entries. And this model is framed around the weekly expansion. So our goal is to catch some bit of that move which the weekly candle will offer. Now, how do we frame our trades around that? We first of all have to determine on the higher time frames, the daily and the weekly, our key levels. Now, in this example, we are using a bullish example, so we use a bullish key level, but this obviously also applies vice versa for a bearish weekly bias. Once you have determined the weekly bias, the next step is to mark out the daily and weekly key levels. That's the weekly prep you want to do always on Sunday. Mark out your daily and weekly key levels where you want to see the weekly candle to expand into, and then use that key level to kick off the weekly expansion into that higher time frame draw on liquidity. Now, the most important thing when it comes to this model is you have to wait for the Monday daily candle to play out. So you let a Monday daily candle close, and this will define the Monday range. And the Monday range is going to be the most important element to confirm the weekly narrative going into Tuesday, Wednesday, and the rest of the week. So once the Monday range has formed, ideally it forms around the key level. As you can see here, we form the Monday range. Above this key level, we also got this old low resting right above. That makes a key level even more high probability if we have an old low resting above the bullish key level, because this will act as a manipulation into a key level. And then once we have the stop run, we can look for the expansion later on. And as you can see, Monday range, why is it so important? The Monday range is pretty much the same as the Asian range for the daily candle. So Monday builds up liquidity at the Monday range high, the buy side, and then the sell side below the Monday range low. And now you want to combine the economic calendar to anticipate when price is likely going to move above the high or the low. In this case, we are anticipating price to move below the Monday range lows first, because we want to look for buys below the Monday range low inside the key level. Now, if we have news, high impact news on Tuesday or Wednesday, then you can anticipate that the manipulation will either happen on Tuesday, if that's where we have red folders, but if we have no red folders on Tuesday, but on Wednesday, then probably on Wednesday we will have the manipulation as a rule of thumb. So the goal here is we don't want to trade as long as price is in the accumulation phase and the manipulation phase. So in this example, you can see here price is in accumulation here and then in manipulation right here. And our goal is we only want to trade once price is going from accumulation into manipulation and then into distribution. And that's the move where we want to trade our weekly one shot, one kill trade opportunity. Now, the next thing which you want to look out for is the daily closures around the Monday range. So if Monday sets the range, then on Tuesday we get the manipulation, or on Wednesday, you want to see that daily candle to also close inside the Monday range. That is really important to make the probabilities much higher that price is truly in a manipulation phase and wants to attack the Monday range highs next. So you want to see the daily candle to not close below the Monday range low. Now we can see an hourly candle closing below, but on a daily basis, you want to see the daily candle to close inside the Monday range. So you wait for price to run the key level, the sell side, below the Monday range low. That's then where you want to see price to form accumulation. Also, at that key level, that's where you want to look out for an SMT. For example, right here at those lows here. If we have SMT between euro and pound or euro and DXY, that makes the reversal more high probability. And always remember, SMT is not a trade confirmation. SMT is just a confluence once we have seen here the confirmation. Once the H4 and H1 order flow is aligning again with our weekly bias, then that sets the stage for our trade setup. Wednesday, that's where we form the reversal. And the goal is here to not trade the reversal. You want to wait for the market to confirm the reversal here by giving an hourly and or H4 change in order flow and then getting back inside the Monday range. Now, once we have seen that, the reversal being confirmed, then we print here the low risk buy. Now, the low risk buy is already tradable, but the much more high probability setup is once we have confirmed this low risk buy and price already trading back inside the Monday range. And that's happening here exactly on Thursday. And that is not the opportunity to enter a trade on the H1 time frame. You can also refine on the M15, but the H1 is already enough to get into a trade. Now, how do we get into a trade here? We have seen the manipulation, then price forms here the low risk buy after we have formed the reversal here. And then we see price pushing up higher. And once we make a new bullish dealing range, we close above this high here. And then at this point, the stage is set for a run at least into the Monday range high, which is your TP1 Monday high. And then you can all the way look for continuation plays into the higher time frame goal, which you have determined in the first step when it comes to the weekly bias, right? What is the weekly target I am aiming for this week? Also, you can see here the weekly candle. If we take a look at the weekly candle, how it looks like, we have the open right here on Sunday evening, and then Monday's accumulation, Tuesday and Wednesday, we have the manipulation into the key level, and then we start the expansion phase. Now you don't have to catch all the way the bottom down here. You only want to catch this move or part of this move once we have confirmed the reversal here on Tuesday or Wednesday, or sometimes also happens on Thursday, but usually Tuesday and Wednesday will give you the confirmation, and then Thursday and Friday will give you the expansion into the target. Wednesday and Thursday are the most high probability days where this model usually gives you an entry. Monday, you wait. Tuesday can also sometimes give you already an entry, but usually it is Wednesday or Thursday, and then you will see the expansion into the target either on Thursday if the reversal prints on Tuesday, and if you print the reversal on Wednesday and we have not met the target with the expansion on Thursday, then Friday can also give you an expansion. But if Thursday already hits this higher time frame target, you don't want to get into trades anymore for continuation on Friday since the weekly target already has been met. Now, how do we enter trades based on this model? You have two options here. You can either buy below a weak low, which formed inside this range. To know what a weak low is, you can watch my video on advanced internal and external liquidity. You buy below and then put your stop at the last strong low, which is taking liquidity, in this case the strong low, and then you aim for your first target on the Monday range high, and then the second target for the higher time frame objective. Now you can also get an M15 entry or even an hourly entry by waiting for confirmation below this low right here. So we see price on the Thursday candle. Again, we here combine then the Thursday open, high, low, close. We have the open, we form the low, and then we start expanding. And you can look for the same confirmation we have seen here on the weekly time frame on a daily candle time frame. Meaning you drop down to the hourly or M15 and you look for a confirmation by a change in order flow below this low, and then you get into a lower time frame trade, and then you can use also this recent low which forms here as your confirmation and aim for the same targets. The next step, what you want to watch out for is once price is trading above the Monday range high. If you want to see a continuation the next day, you want to see the daily candle of that day to close above the Monday range high. That's really important because that's a high probability continuation sign. If we close above, that sets the stage the next day to expand into the higher time frame target. If we reject the Monday range high and we close back inside, then that's an indication that price is in a consolidation and will remain trading inside the Monday range, and you don't want to look for an immediate continuation the next day. Same logic as we used down here. We close inside. We now want to see price closing above to confirm that price is in a weekly expansion profile. And you can apply then the same entry model. You can buy below week lows, hourly week lows, put your invalidation at the recent strong low, which is take liquidity, and then just ride the wave up into the higher time frame target. And you can do this, repeat that process until we have met this higher time frame target. So sometimes you can have like 1 or 2 trades in a good week, maybe in 3 trades, depending on how big this expansion will be. And then you repeat that process, rinse and repeat until we hit that higher time frame target. Now, obviously, not each week will give the setup because not each week is an expansion profile. But if you apply those things right here, which I outlined, then you can identify the high likelihood by using the daily candles and the Monday range to validate if price is going to expand the next day. And you can definitely get a handful of trades per month only using this model. Literally is all you need if you're working a 9 to 5 and you can't watch the charts on an intraday basis on like the M5 time frame or below that. And to illustrate this model, we will go over a real market example and I will show you exactly how you can apply this model in the real markets. Then let's take a look here at UJ this week, where this model actually played out. On the weekly time frame last week, we swept those triple equal highs. So we can look now for a pullback potentially the next week if the daily time frame and the Monday range gives us our confirmation for that. So we can see here Monday daily candle. So on Monday we form the Monday range. Tuesday daily candle closure and we close inside the Monday range, meaning we can at least expect a continuation into the Monday range low, and if we close below we can expect a continuation into the higher time frame target, which would be pretty much this daily imbalance, and to fill that potentially a bit deeper. So then we go to the hourly time frame and we now simply plot the Monday range, and we can see here on the hourly we sweep the Monday range high, close back inside the Monday range, form a bearish OB, bearish imbalance, and then we engineer this internal week high which we sweep, so you can short this, put your stop above the Monday range high, get your entry down here. So you can either set a limit up here or put an alert and then just check the chart manually once price is trading above. First TP, the Monday range low, and then as mentioned, if we close below, we can expect a continuation the following up days, and you can leave partials for lower, or you can look for a re-entry the next day. Wednesday, it's retracing, filling this inefficiency, and then we get the daily closure below, right? Daily close below Monday range, indicating a continuation. What do we do again? We look out for hourly week highs. We have a week high here. We have a week high here as well. Price trades above. You can sell any of those week highs. Put your stop above this H4 OB, which is also a propulsion block right here, and then aim for this low down here as a final target. And you see how the Monday range low, once we close below, is acting here as resistance. Price approaches the key level and then is displacing from it. And all you have to do is place alerts above week highs. Look how the Monday daily candle is forming. And if we close inside the range after the manipulation, and then once you're in the distribution, you want to see price to close below the Monday range low if you're bearish, and if you're bullish, above the Monday range high, obviously. So I hope you guys could learn something from this simple model, and trust me, this model is literally all you need if you can only watch the H1 time frame, and you will get enough setups if you just only watch the FX majors. I would appreciate a like and a comment down below. And with that being said, talk to you guys in the next video.